Good morning from our world headquarters in New York. I'm Menace Cranny with Denny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Tesla soars on the promise of making cheaper cars sooner. Meta takes the spotlight after the close. More earnings. Boeing's cash burn will be in focus when results drop before the open. And the Senate passes the $95 billion aid package, clearing the way for fresh arms shipments to Ukraine within days.
Danny, everybody loves a comeback story. Everybody likes the sound of what they heard from Elon Musk yesterday. The stock is up 10%. Or is it those people who believe in autonomous driving? Because it basically had a message. The stock is up over 10% this morning, 51.14. More Mag 7 to come through. The Mag 7, magnificent turnaround yesterday. But there was a message from Elon Musk, and we'll talk more about it in a moment. If you don't believe in my vision of autonomous driving, don't bother owning my stock. 2-year yields, they came, they bought. The bid-to-cover ratio was nice on the bonds. We've got 5s and 7s coming today. They lapped up the 2s yesterday. Bank of America were with me yesterday. They said, lean into duration wherever you are. However, there are cracks in the ISM that we saw yesterday, and that helped cheapen the yields up. Dollar-yen, get ready for intervention. We've had a very, very senior former Vice Minister of Finance, Furusawa, say we're close to intervention, along with Suzuki, the Finance Minister. So intervention is on a watch as we hit a fresh 34-year low on dollar yen. Danny, good morning.
Interventions talk, but still lower on the yen. That seems to be the trend. Manage quickly. We have some breaking lines coming through. We have a new April Bloomberg News morning consult poll. It has found that President Biden is ahead in just one of the 7 swing states, that one being Michigan, by 2 percentage points. Biden also trails Donald Trump slightly in Pennsylvania and Wisconsin, but his deficit menace in Georgia, Arizona, Nevada, and North Carolina is larger. And I found it interesting when you ask about the economy, when you ask about inflation, more than 50% of swing state voters think it'll be worse by year end.
Well, this is where Bidenomics is now very, very clearly equated. 3/4 see Bidenomics being responsible for inflation. 50% see it being very responsible for the state of the economy. The other thing that comes through in this morning consult poll is that Trump leads in the head-to-head matchup with Biden in 6.
Yep.
There's let's say that State of the Union bump that Joe Biden had seems to be dissipating ever so slightly.
Yeah, certainly is. Well, a lot has been on the agenda since then, from global geopolitics to Israel to the economy. And we're going to talk about that in just a few moments with our Anne-Marie Horder and Manus.
Indeed. I mentioned everybody loves a turnaround story, and Tesla did that. It snapped 7 days of losses, extending its post-earnings rally as the EV maker announces plans to speed the launch of cheaper cars.
We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup.
Well, let's bring in our global autos editor, Craig Trudell, for more. Craig, are you surprised? I mean, it was quite a turnaround, just how positively the market took this report, given the dissipation in gross margin.
Yeah, I mean, really, everywhere you looked on the earnings results, things were not looking good and came short of expectations. I think if folks were closely reading our very own Ed Ludlow and Dana Hull earlier this week, they would have seen that this was the plan, that what Tesla was going to do was take some of the work that they were doing on this next generation vehicle that they've been referring to as coming late next year, and apply them to existing models, and particular emphasis on the Model Y. That was in our big take at the beginning of the week. I think the only reason that Musk didn't, quite, confirm that just outright is he can't say at this juncture that, the Model Y and the Model 3 are going to get cheaper, perhaps even by the end of this year, because that may just lead more consumers to potentially hold off on buying and kind of wait for prices to bottom out on those cars.
That's a good point, Craig, and maybe one of the reasons of many he didn't give many details. If you look at what Musk did say, Manus mentioned this, quote, if someone does not believe Tesla will solve autonomy, they should not be investing in the company. Instead of giving details about cheaper cars, he talked about autonomy, he talked about AI, he talked about robotics, he talked about his robo-taxi. Craig, it seems like he didn't want to actually talk about the outlook for cheaper vehicles.
No, absolutely right. And everyone's been freaking out about this, $25,000 car that they said was going to come, potentially as soon as late next year. I think, I didn't hear anything last night to sort of dissuade me from concluding that is still called off. The reports of the last few weeks that has everybody, panicking in the lead up to this call, those are all valid, and yet it does seem like the market, heard enough to get excited about this idea of, well, there is at least a plan, in the interim to sort of reinvigorate growth, even if it's with the existing lineup.
Right. Of course, we're not going to get that until, as Musk says, at least the fourth quarter. And oh, by the way, they have to do the robo-taxi thing before that. So I think we're going to be waiting a while. Craig, thank you so much. Craig Trudell. Joining us now is Richard Clode, Technology Portfolio Manager at Janus Henderson. Richard, thanks so much for joining us this morning. Good morning to you. So if we look at the reality of Tesla, it is falling sales despite price cuts that ate into margins and at the same time ate into cash flow, turn that fortune around. That's the reality. The dream that Musk is selling is one of robo-taxis, of autonomous vehicles. Are you buying the dream, Richard?
Well, that's it, isn't it? It's selling the dream to try and kind of get investors not to look at the fact that we've had $60 billion of revenues taken out of estimates for next year, and EPS estimates have gone from $8.50 down to $3, which is why you wouldn't be buying the stock even here based on that earnings trajectory. But, we can all now look forward to a robo-taxi launch in August, and then, FSD and solving autonomy at some point later this decade. And for us, we're just still lacking a bit of conviction in that. And as you say, there was just some confusing comments about that cheaper vehicle launching next year. Elements of the new platform, but using the existing lineups, are we truly going to be able to get that mass market price point that's going to drive the next sort of wave of EV growth?
Good morning, Richard. So you don't sound at all convinced that you should be buying this stock at this level. What was the most disappointing part of it? I mean, it was almost like if you're not with me, you're against me. If you do not believe in autonomous driving, don't bother owning my stock. If somebody doesn't believe Tesla is going to solve autonomy, I think they should not be an investor in the company. It's very Machiavelli challenge back to the bears.
And Elon loves challenging the investors generally, and especially the bears and the shorts. But we think autonomous driving is one of the hardest challenges to solve for in AI. And Apple said that categorically. And so we just think it will happen, but it's probably just going to take longer than most people expect, and certainly longer than Elon expects. And as a result, we're probably not going to see that impact to the earnings of Tesla till much later in the decade, which for us is a bit longer to be putting into an investment horizon for the stock today.
And Richard, to that point, you write in your notes about how we still need to think about price to earnings. Valuations matter, despite what some have said, but it's figuring out that earnings portion that is really key. You mentioned it in talking about Tesla, but for the wider universe of AI stocks, how can we figure out what future earnings is? How can we appropriately price these stocks when our puny little human minds can't actually grasp what the future of AI is?
And that's the great question, and hopefully why me and my team won't be replaced by AI just anytime soon. The poster child for this was NVIDIA. If you'd figured out that you needed a GPU and you needed an NVIDIA GPU to train these large language models, you would have understood that earnings weren't going to be $6 for this year. They were going to be north of $25. And actually, NVIDIA 18 months ago was on 6 times PE, and any value investor in the world could have bought it. And I think what you've got to look at is, where does this technology go from here? As we go from training to inferencing to building out and scaling out these great AI products and services we'll see over the next few years, what's that going to drive in terms of semiconductor earnings for beyond NVIDIA, for some of the cloud platforms, for some of the software companies, and come to some reasonable expectations for what that E can really look like. And then you can get more comfortable with the valuations. The problem is there are only going to be a few winners. This is a winner takes most industry. There are only going to be a few winners in AI. And your key as a stock market investor is to identify them and not get caught up by the guys who are going to be left behind.
That's a flesh wound to everybody else is saying that the picks and the shovels, etc., of AI are going to be the winners, and that's where you go for breadth. So I take it maybe you're going to push back on that. You say that AI, understanding the E, as Danny said, as part of the PE, we often get this wrong at inflection points in history of when we have these big evolutionary moves. So who then, in your view, has got the best capacity to monetize AI efficiently, at cost, and with profit in the near term?
Yeah, so I think we're going to see some of the cloud platforms deliver earnings over the next week or so, and I think you're going to start seeing some more proof points that we're starting to see that re-acceleration of cloud growth, and a catalyst for that is the shift to AI. Both in terms of being able to having to shift your data into the cloud to really leverage the benefits of generative AI, and then obviously some of these AI services and products that the likes of Amazon and Microsoft are now offering. It's still early days, but I think if we can get some proof points and more tailwinds to a Microsoft, to an Amazon, that's going to give us comfort that we can start extrapolating that into the future to much more meaningful numbers, 2 or 3 years out. Still very early, I think, for the software companies. Even a Microsoft Copilot has only just launched a few months ago, so we still need a bit longer, to get comfortable as to when those penetration rates are going to get really meaningful. That's still probably 2 to 3 years out.
Well, Richard, you hit the two big companies that are reporting earnings tomorrow. What about the one today? What about Meta? Has Meta successfully leveraged AI and its algorithm and Reels to have an actual competitor to TikTok?
And that's a great proof point that generative AI can truly have a meaningful impact on your business. They're harvesting the rewards of investing in this technology, a couple of years ago, and everyone was criticizing Mark Zuckerberg at the time, but now they're seeing a meaningful impact in terms of engagement, in terms of the ROI on that ad targeting, which means that their advertisers are willing to spend more. Obviously, talking about a Tesla versus a Meta, a stock that's up 40% versus a stock that's down 35%, you have very differing expectations. And as we heard earlier, the expectations for Meta are a lot higher. But they should be able to deliver to that, and I think the reaction on the stock will be much more around more extreme positioning around Meta and whether some of that's washed out in the last week or two or not. But the fundamentals are very solid for the company, and the valuation still remains fairly attractive relative to the market.
Yeah, and still so much riding on these companies to perform this quarter to lift up the overall stock market. Richard, I'm afraid that's all we have time for. Please come back and join us. Richard Clode of Janus Henderson, thank you. All right, Manus, let's get to some of the other top stories that are trending on the terminal this morning. Kering shares tumbling. They've warned that first half profit will drop 40 to 45%. Sales at its biggest level. Gucci are slumping on weak China demand. It did hire a new creative director for Gucci last year, but it has warned that the turnaround will take time with a cooling luxury market.
UBS Chairman Colin Kelleher says the Swiss government's plan to raise capital requirements is, quote, the wrong remedy to the failings that brought down Credit Suisse. UBS is holding its annual general meeting today in Basel.
CVC Capital Partners is exploring options for its controlling stake in the Italian drug maker Recordati. The buyout firm is said to be informally reaching out to some potential buyers to gauge interest in a deal. Recordati's products include treatment for cardiovascular disease and coughs and cold.
Coming up, the former President Trump leads President Biden in most swing states. The latest Bloomberg Morning Consult poll on Bloomberg.
It's Bloomberg Brief, Danny Berger and Manus Cranny in New York. President Biden, Manus, is leading in just one state, Michigan, out of 7 swing states, as the former President Trump picks up steam in April's Bloomberg Morning Consult poll. For more, we're joined by Bloomberg's Anne-Marie Hordern. Anne-Marie, I mean, it's hard to interpret this as anything but bad news for Biden, but it seems the overriding message is it's about the economy, it's about inflation.
Absolutely. And what you continuously see in our poll is that this is what voters are going to go out and vote for. It's back to that saying, it's the economy, stupid. And when you talk to individuals at Morning Consult, the firm that we do this poll with, what they will say, and Matthew Monday said this, is that more and more you see voters linking Bidenomics to Biden, it's in his name, but also the inflation rate to Biden. So it doesn't seem to be landing on voters' minds when you say the rate of inflation is coming down, because they're thinking of what were the price of goods before you went into office and where are the price of goods now. And that really seems to be weighing on all these concerns. And this is going to be a big problem for this administration, this campaign, if the inflation rate, if we keep seeing these bumps in the road or hot CPI prints before November 5th.
So essentially, he's lost the bid that he had from the State of the Union, the nice bid, the nice bump. And here we are, 1 in 5 expect inflation and interest rates to be lower at the end. Again, this is about perception now and where we are as we go towards the end of the year and towards that election.
That's right. So when you look at the expectations voters have, is that they don't seem to think that it's going to get any better.
No.
This issue, which is why Biden right now is only leading in one of the swing states. That's Michigan. It also seems that he's having a lot of tough trouble in places like Pennsylvania and Wisconsin. This blue wall really seems to be a difficult path for Biden to win the election if he doesn't shore up that blue wall, which is also why you see him visiting places like Pennsylvania. Last week, he spent, 3 days in Pennsylvania. This is really important for him to try to win this election. It's going to come down to these 7 key swing states. And then you see what the campaign is doing. What they're doing is they're going after things like trying to tap into voters' concerns about things like abortion. And that's actually something that does land, and you could see that in our poll, does land on our voters, especially suburban women. And this is going to be a deficit Trump has with these people because he hasn't exactly landed the message. He's trying to assuage their concerns, but at the end of the day, he put some of those justices on the court that ended up striking down Roe v. Wade.
Right, and he's taken credit for some of that, too. So that certainly doesn't help with those voters. Anne-Marie, over on Capitol Hill, we finally have a rare agreement. We have the $95 billion emergency aid package passed for Ukraine and other allies. Presumably, allies look at this and they say, OK, regardless of whether it's Trump or Biden who's in the White House, at least it's in the context of support now.
Well, yeah, so you see we have foreign aid passed through the House, which was key, which basically meant the Senate was not a matter of if, but when they were going to pass it, and they did it, able to get it on the finish line late last night. $95 billion going to Israel, Taiwan, and Ukraine. What I would stress, though, is look at the margins on the House when those bills were voted on separately. You had a lot more protest votes for aid to Ukraine. So potentially, what does this mean if we were to see a Trump 2.0? Because a lot of those votes came from Republicans who still question why they are spending money to Ukraine. And then, of course, as we head towards the election, everyone is concerned about what's going to happen with TikTok. In this provision, 270 days. That's what ByteDance has in order to divest or face a ban, but then the president can extend that for 90 days. This is going to be either Biden or Trump dealing with this issue because that 270 days brings you to the day before the next inauguration.
Okay, Anne-Marie, thank you very much. That's Anne-Marie Horder with the very latest on politics and the Morning Consult poll. A little bit of breaking news for you. This is, again, more intervention in China. China telling the brokers to limit their exposure to what they refer to as snowball derivatives. So this is something that they had warned about before, and again they've stepped in on a number of occasions, Danny, to try and limit the volatility within equity markets. But this is the very latest line from them. Snowball derivatives is where they want the limitation.
Right. So these are bond-like options that essentially pay off if the stock stays in a certain range. Late last year, huge sell-off in China equity markets that policymakers blamed the quants, they blamed the algos. So as you say, Manus, yet another step to try to prevent them from bowling around the stock market. But then the question is this really a free stock market that you can trade?
Well, we know it's one of the dirtiest. I mean, we talk about dirty shirts and we talk about dirty markets.
Yes. And
the Chinese market is undoubtedly within the equities. It is controlled by state-owned entities. It is one of the dirtiest shirts. But there's plenty of them out there. They're not alone.
They're certainly not. Okay, coming up, we're going to have some of the top headlines for you.
It's Bloomberg Brief. I'm Manus alongside Danny Berger in New York. Let's get you up to speed with the front pages from around the world. This is what we're checking in on the headlines. First up, President Biden strongly criticized a 6-week abortion ban that will soon take effect in Florida. This as he attempts to take the lead in the election campaign. Polling shows that the issue is one of the few areas in which voters place more trust in the president than in Donald Trump. That is according to the New York Times.
Yeah, we saw some of that in our
Morning Consult. Yeah.
Exactly. So that's reflected there, too. Now, next up, Manus, the U.S. FTC has voted to ban non-compete provisions that limit workers from switching jobs within an industry. A lot of bosses are going to be upset about this. The Chamber of Commerce vowed to immediately challenge it in court. It comes 3 years after President Biden signed an executive order, Manus, encouraging the FTC to limit such rule.
And the U.S. economy, if you didn't already know this, is booming. That's according to J.P. Morgan.
Really?
Boom, boom, boom. J.P. Morgan's Jamie Dimon. And he was speaking at the Economic Club in New York yesterday. Let's just take a listen.
So far, we're in pretty good shape. And so far, it looks like that soft landing type of scenario. But I'm putting me on the cautious side of that one.
Ironically, he is on the cautious side in regards to a soft landing. And when he was talking about energy prices, and he was surprised. He was surprised, actually, how little war premium there was in those prices, a tax on infrastructure. And he said, look, it doesn't take much to get oil to $120. So there's a salutary warning in that to a lot of the commodity and oil traders out there.
Well, Jamie Dimon saying, look, I think it's going to be a soft landing. There are risks to that. It really reflects, I guess, the choose your own adventure narrative that we're having in this data right now. You have one, you mentioned the PMIs yesterday looking weaker. And then on the other side, you have Visa, for example, saying, oh, people are spending, our credit cards are looking so strong. So you can say, okay, weakness, but a consumer spend. That's why you get such different and unsure opinions about this economy.
But that's why nobody's really sure whether the Fed will have a continued narrative of disinflation. Would it allow them to do the 2 rate cuts that are sort of penciled in there now? If you go on to listen to, there's quite a lot produced from that conversation yesterday. It is really surreal, the praise that he was leveling with Modi in India in terms of galvanizing a country, bringing it together from a tax, from a social reform point of view. But this all plays to the point of where is China, where is India in this overall BRICS narrative?
Well, this also leads to the other line I wanted to read to you that he said. I've always said I'd love to be president, but you'd have to anoint me, folks. That's a man who wants to be president. He wants to be anointed.
Who wants to run for presidency? A third spoiler. Marvin Loh from State Street Global Macro Strategy joins us next.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Tesla soars on its promise of making cheaper cars sooner. Meta takes the spotlight after the close today. More earnings. Boeing's cash burn will be in focus when its results drop before the open. And the Senate passes a $95 billion package of aid, clearing the way for fresh arms shipments to Ukraine within days. Plus, a Bloomberg Morning Consult poll shows President Biden is ahead in just one of the 7 swing states. Danny, good morning.
Good morning, Manus. It's the turnaround of the turnaround. Equities posting the biggest 2-day gain since February. We still have a ways to go to make up for some of the losses, but a couple of things helping us this morning. One, Tesla up nearly 10% pre-market. Earnings that literally disappointed in every single metric except for the promise of cheaper vehicles. U.S. 2-year yields, these were at 5% not that long ago. We've dropped below that, just above 4.9%. We're up another basis point this morning. Weaker PMIs at a 4-month low for the composite also added to bets that we will cut. We're back above 50% odds for a cut in July. That helping yields this morning. And an auction yesterday, a record 2-year auction that was well absorbed. Finally, Brent crude back below $89 a barrel, just about at $88 a barrel. Manus, this is a thing that can't hold a bid. As you were saying, Jamie Dimon saying he's surprised that we're not closer to $100 a barrel or more, but it is really the fundamentals that are driving the market, not necessarily a war premium.
Yeah, and there was a crack in the wall of the eco-narrative yesterday on the PMIs in the United States of America before that auction, Danny, came through. And in terms of the market narrative this morning, all eyes are on that Tesla stock. We'll keep a watching brief on it. It's up 10% pre-market. I mean, it's a typical Machiavelli kind of response from Elon Musk, which is either you're with me on autonomous driving or, you know what, don't bother being a shareholder in my company.
Yes, but if you look at the actual data, not the dream that he's selling, 5.5% operating margin, Manus, that's worse than GM. It is cash flow that is negative for the first time since 2020. In essence, he cut the prices to get more volume, but sales still languish, and instead, it results in weaker margins and cash flow turning negative.
And nor have they actually detailed what's going to happen in that much, much cheaper model for them. There's lots of promises about what they're going to produce, but we'll see a little bit more tangible on robotaxi on August the 8th. Well, our next guest writes this about the overall market and investor behavior. It still shows an overall constructive risk environment, institutional risk-taking modestly positive. And while it's far from a screaming risk on, it should benefit the same dominant companies as we get into the heart of the earnings season. It is Marvin Loh, Senior Global Macro Strategist at State Street. I love that phrase. It's not a screaming risk on. I mean, if you take your mind back to the middle of last week, people were a little bit worried, Marvin. Good morning. And that there was a shudder in the markets, and it was far from screaming risk on. Did you question yourself?
You know what? We question ourselves every day. Certainly valuations got pretty high pretty quickly. Consolidation is not necessarily bad. And without the catalyst of the bigger earnings names last week, we were floundering on Fed talk, which was trying to pull back everything that they decided that they wanted to lay out at the end of last year. So we're past that. Now we're getting into earnings, and we'll get into more of those idiosyncratic stories. And we'll really see if the love affair that we've had with tech, me being one of those who love these companies and these business models, is warranted.
Can I just ask, I'm assuming the love affair doesn't extend to someone like Tesla, because this is the question with these big growth companies that have these huge valuations on it, is that the future cash flow needs to be there. Are you convinced that a lot of these big tech names, if you don't want to talk about Tesla individually, can actually show up with the promise of AI that they've been giving?
Yeah, I mean, one of the strengths, I believe, in the Mag 7, if you will, and we'll take Tesla a little bit out of that story, is the fact that they've got these defendable moats, and they've had these defendable moats for an extended period of time, and they're just getting stronger. So yes, these cash flows, the ability to really financial engineer their balance sheets in a way that is a competitive advantage, is something that they retain.
It's interesting. I was chatting to Mandeep Singh, who comes on and covers our tech for BI, and he said, look at Apple and look at Tesla. They have been demolished because of their China exposure. Look at Microsoft, and Microsoft is virtually, it's moated from any exposure to China. This, the biggest issue in Mag 7 and in some of the narrative is your exposure to China and how quickly that can evaporate.
Yes. For sure.
And that's probably the bigger risk we need to recategorize.
Yes, for sure, for sure. And, they are selling global products. And you have these very, very quick changes in what was some of the most important markets for these companies. And I think that the fact that it could change so quickly really catches folks off guard a bit.
What's the next growth engine then? If it's not China, do these companies turn their attention to India?
Yeah, for sure, for sure. The whole manufacturing process is also changing. That's going to be something that's a multi-year evolution. But certainly AI is part of that story, and I think that we're very, very early in that discussion.
Where are we in the bond market? Because we're trying to debate whether it's 2 cuts, 1 cuts, no cuts hike. So take your pick. Yeah. It's a wonderful buffet. Yeah. At Bank of America with me yesterday, and they said, well, what if rates didn't change for the next 2 years? Yeah. You may see a backup. And what is the worst case scenario in a higher for longer environment?
Yeah. You know what? I think it depends how you want to approach the bond market. One is just, ultimately how you trade. And we talk about that a lot. What part of the curve might benefit from rate hikes, from cuts going from 3 to 2 to 1 to hikes and whatever else. And there are ultimately ways to play that. I think that if we look at it from the perspective of what's priced out there, it's pretty fair. We've got a little bit of hikes. We've taken pretty much all the cuts out. Modally, we only have 1 this year. Have we moved that enough? We probably have. And we saw that just 1 data point. Remember, yesterday's PMI was not the primary ISM that we look at. It's granted, it's the version of PMI that drives a lot of the other global markets. But in the U.S., we usually rely on ISM to give us a look into service, to give us a look into manufacturing. So you could see how offsides the market was. And that's definitely a trade. If you're looking for that trade, probably the 5-year part of the curve is the cheapest. And there are ways to play that from a hedging perspective. But if we're talking about rates not changing for 2 years, one really has to...
I'm throwing that out there because that was Bank of America's thesis. So.
No, for sure. And it's something that we should think about because this lagged economic policy has been so long that one really has to ask, is the lag somewhat permanent? What does that say about the U.S. economy? What do rates need to look like in that type of environment? And then I think you wind up with a much less sanguine view where maybe 10-year yields need to be 5% on a regular basis rather than kind of the ceiling that we have now. And does the curve bear steepen, kind of in our parlance, in that type of environment? And those are the questions that we're asking because they're more intermediate in nature and they're probably more asset allocation important for the investors that aren't just the traders out there.
Marvin, we've run out of time to talk about Taylor Swift's new album. I know you're going to be disappointed we didn't get to it.
The drop.
Next time.
Next time. Marvin, thank you so much for joining.
Should get you merchandise for the next time you're in.
Yeah, we'll play some intro music for you if Taylor Swift will let us not have to pay for it. Marvin Loh there, thank you so much. I don't think we can afford that, let's be honest. Okay, coming up, Things aren't looking very Gucci for Kering. Well said. The luxury group is falling in trading this morning after a profit warning. That's coming up here on Bloomberg. It's Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. So Kering shares are tumbling this morning. The luxury group behind Gucci has warned that profit will plunge in the first half of the year. For more, let's go to Deborah Aiken, luxury analyst for Bloomberg Intelligence. Plunge is probably the correct verb here, Deborah. 45%, up to 45% of profits dropping in the first half of 2024. That is a painful slump.
Yes, it is indeed. The market was looking at 21%, and that was a big downgrade after in March they'd said sales would be down in the first quarter around 10% and Gucci would be down around 20%. It came in down 18%. If we look at what it's about, the brand is still not resonating. The brand is doing very poorly in Asia, particularly in a very soft China, which is softer than expected for everyone. So it has to be about very high-end brands doing well over there. There's not enough new product in there. And the carryover product, which from the prior creative designer, is just not hitting. So they really need new product in. Will be a 30% new product by Q3, and we push this to a earliest 2025 recovery.
Deborah, good morning. It's Manus. How much can Gucci rebalance itself away from China? Every tech company we're talking about has issues in China. The bottom line is politics and the middle class are the headwind to most of these brands in China. Can they rebalance from China, or is it something more structural?
I think it's more structural. We have, China is by no means, when we go out of tier 3 cities, there is so much lack of visibility of top luxury brands still across China. And so there are many more brands outside of Gucci pushing for bigger content and exposure in China. And I think that comes on a long-term basis. But what you need right now in the marketplace is something that really resonates, your brand that is hot on social media, on video and others for the Chinese market. And Gucci just doesn't have that. 7% of its retail mix is from its new designer, De Santo, and that won't improve until 3Q this year. And even then, the product that was there is not backed enough. So they need to think about the redirection of the brand in terms of very high end and some product at the lower end, where they're in middle ground at the moment, and that is clearly suffering there.
Okay, Deborah, thank you very much. A pretty tough day for the stock at the moment on Kering. Well, Meta posts its results today after the bell, and generative AI is on the agenda. Analysts will be looking for signs of a stronger monetization of the company's video content. Alex Webb is with us. Alex, good to see you. So I think there's some magnificent number out there, 200 billion streams that we've seen on their video content. TikTok is taking flesh wounds. What are you going to be eyes on?
I mean, the main thing really to look at is the ad business, right? Meta is an advertising technology company. There is some expectation that the ad market is starting to pick up a bit. That will give Meta in particular some power when it comes to pricing. I think the thing when we think about AI is, yes, there is this whole piece with generative AI. Are they making money from licensing what they have been able to do in that space? But it also shows that they have been using artificial intelligence for some time in their advertising products. You know, it's well known that they have lots and lots of top AI brains working at Meta. Now people have recognized that and say, well, what have they been doing? Clearly, they've been working on these ad products, and they've developed more and more sophisticated products in that space. Reels and products on Instagram are really starting to capitalize on those too.
Manus, here's something that's really evocative of what's been going on lately. Zuckerberg now more wealthy than Elon Musk.
There you go.
Yeah.
The rich list shifts. That's alliteration that could have gone badly wrong, couldn't it?
No, that was good, but it really does show the differing in fortunes of one which was the darling of the Mag 7, one that was falling out of favor. But Alex, if we are getting this TikTok bill passed, which we are getting it, Biden's likely to sign it, you get 270 days for them to divest. Does this ultimately just go back to help Zuckerberg, to make him higher up on that rich list and help Meta and help Reels?
if this thing goes through, right? I mean, it's going to go through, it looks like, on a legislative basis, but there is going to be a big appeal from TikTok. A lot of people suggesting that on a free speech basis, the courts might actually block this. If the deal, if they do end up having to divest it or in fact just take the business out of the US, then there are probably three beneficiaries, of course, Meta, and in particular Instagram, YouTube, which has, of course, now got a short video, vertical video format as well. And don't forget about Snap, the parent company of Snapchat. Not quite as big as those other two, of course, but could around the fringes be a beneficiary as well. But even though there are 270 days from President Biden signing into law to the time when ByteDance would have to somehow divest this business, it could be longer than that by the time all the court cases play out.
Alex, we would never forget about Snapchat. Alex, thank you so much. Bloomberg's Alex Webb. Okay, let's turn to Boeing now. Boeing's free cash flow and capital reserves are going to be in focus, along with a lot of other things for investors when it reports earnings later this morning. Let's bring in Sid Phillips, who helps run our global aviation coverage. Sid, I mean, between the numbers themselves and just the chaos and as a new CEO coming in, what in the world are investors going to have their attention grabbed by?
Morning, Danny. So yeah, investors are going to be looking at cash. Cash is going to be king on the Boeing earnings, because essentially the 737 MAX, which is their biggest cash cow, has basically been restricted from deliveries, and the company's producing fewer, and it's also sort of producing them slower. And so that's basically a major cash drain for Boeing. And together with an $8 billion loan debt payment, it's going to basically have a massive impact on Boeing's cash balances. And so everyone's really going to looking at what Boeing's talking about in terms of building up production again, as well as their new CEO, because they've announced management changes. And the CEO, Dave Calhoun, has said he's stepping down at the end of the year.
Sid, good to see you. So, yeah, he in theory will be there until the end of the year. I think that's very debatable in the market, isn't it? They're trying to buy Spirit, and that's all about control of the supply chain, improving the quality. Now, what is it that's causing that deal to go slowly?
Yeah, so Spirit is Boeing's biggest supplier. They make about 70% of the 737 MAX fuselage. But Spirit also gets 20% of their revenues from Airbus. And we understand that Airbus has been sort of negotiating with them hard on pricing, and that's really holding up the deal. Neither Boeing nor Airbus want to be basically having Boeing controlling supply of key components for models such as the A220, the A320, and the A350, which are Airbus's biggest models. And so Airbus is it's in talks, we understand, with them, and we really have to see how that goes. But for the moment, that's still going slowly.
It is indeed, along with the production, let's say, returning to some kind of normality. Sid, thank you very much. We will see what those Boeing numbers are later. Now, earlier today, Bloomberg's Kai Johnson caught up with the Ryanair CEO, Michael O'Leary, to discuss the leadership at Boeing. And Ryanair, of course, previously had blamed Boeing's delivery delays for the slowing growth for their organization this year.
I'd be reasonably hopeful. I mean, I think demand is strong on the volume side. We are pretty confident now we're going to grow to about 200 million passengers in the coming 12 months, up from 184 million last year. We will get about 40 aircraft from Boeing, less than the 57 we'd ordered, but that's enough to get 200 million passengers. And I would be reasonably optimistic that pricing through the summer will be up somewhere between 5 and 10% on last year. Capacity is constrained across Europe because of the Airbus fleet groundings, our Boeing delivery delays. So there's a lot of demand. People are going back to the beaches of Europe again. I think the winter has been so awful, people need a break. And they're booking Ryanair flights in their millions.
You bring up Boeing.
Yeah.
It has its numbers out a little bit later on today. What would you like to hear?
I would like to hear more of the same. I've spoken to Stephanie Pope twice in the last 2 weeks. I think she's focused now on getting the head down in Seattle, getting the aircraft delivered. We're seeing optimistic signs. I mean, we've seen aircraft now being pulled from the hulls, being moved from Wichita to Seattle, but without any defects being carried over. I think that's a good sign. It'll speed up the manufacturing process in Seattle. And I think we're now getting, with the new management team in place, I think we're going to hopefully see the end of these production challenges in Boeing.
Last time we heard from you on this matter, I think you were slightly more optimistic. You were expecting maybe 2, maybe 3 more aircraft? Do you think that number rises?
I think, yeah, I mean, we had been down as low as 35 aircraft for summer peak. I think we're back up now close to 40. You know, it's in, but I think we're seeing signs that they're getting on top of it. I mean, the big challenge for Boeing over there at the moment now is, is the regulatory burden. You know, they're in the crosshairs with Congress, with the FAA, everything else. I think that's why Calhoun has done a good job. It's why I'm sorry to see him go at the end of the year. If you're Boeing and you're making aircraft in Seattle, you need somebody who's actually managing the Washington relationships with Congress, with the FAA. I think Dave Calhoun, Brian West, the CFO, do a very good job on that. And you need people to do that job so that Stephanie Pope and the team in Seattle can manufacture the planes.
Ryanair CEO Michael O'Leary telling Guy Johnson that there needs to be continuity at Boeing. Okay, coming up, we're going to take a look at some of the market-moving events. You know what it is. It's Meta earnings today. We'll have that for you next. It's your Bloomberg Brief. Danny Berger and Manish Kranny in New York. Let's get you set up for your trading day ahead. Boeing will be reporting its earnings before the bell after major safety concerns. Then we're going to get U.S. durable goods numbers. Those come out at 8:30 a.m. Eastern. After the bell, it will be Meta and IBM reporting their earnings. Manish.
Okay, let's have some quick check on your micro movers. Tesla is the dominant news theme, rising. They're touting an accelerated plan to introduce that lower price model. So they're not throwing the baby out with the bathwater. It's a lot of promises on that. Texas Instruments, Danny, issued a mildly bullish revenue forecast for the current quarter. And then you've got Visa up 2.78%, beating on the earnings. And the consumer, the hedonism of the consumer in the United States of America and beyond remains strong.
Yeah, I mean, talking about consumer spending being really strong, credit card spending. When it comes to Tesla, I think it's worth visiting this quote that Elon Musk said in their earnings. If someone does not believe Tesla will solve autonomy, then they should not be investing in the company.
I think it's very him, which is basically, I have a dream, autonomous driving, robo-taxis, AI, and if you don't like it and you don't want to pay me, because of course the pay and remuneration has been a very sticky issue, then you know what? Get off my stock register. But his margins are dropping, his sales are dropping, he's under pressure in China. So it depends whether you believe in the evangelism of the dream.
Well, if I can be really brutal,
I mean, you go right ahead.
I mean, Tesla had that recall last week for their Cybertrucks where the accelerator pedal was getting stuck and causing cars to accelerate. If you can't get an accelerator pedal right, why would I trust you with autonomous driving?
Well, you can level the same kind of accusations then at Boeing, and then you begin to ask yourself questions in terms of the 737 MAX and also the questions that are now being raised around the Dreamliner. What are affordable cars? The market needs to know is, what is the affordable car? How are you going to produce it? How much is it going to cost? I mean, these are the unanswered questions of the call.
Yes, because people were ready for the call because they said, we'll get some details from Musk. Instead, all he wanted to talk about, and you understand why, was robo-taxis, was AI, was robotics. And by the way, they ended the call with saying that their investor relations head was leaving. So what a way to end it.
There you go. How to win friends and win friends and influence people. There is another version of that statement as well. And also, how are they going to slash the cost of production by as much as 50%?
Yeah. Is it a new car? Is it a new platform? We're not sure, so hopefully we will get those details. That's for another day, I suppose. For now, that's it for Bloomberg Brief. Surveillance is ahead.